All right. Well, let me get me back on there. There we go. Hey, what's going on, everybody? Chris Franks with Texas West Capital. Good to have you guys checking in with me live here a little bit after 11 a.m. Central Standard Time on Friday, the 26th of April, 2024. Hope you guys are doing just absolutely awesome. I know everybody's okay. Maybe not everybody. Hopefully, y'all aren't freaking out about Bitcoin still being range bound. We're going to talk about that in the back half of the show. But for today, I've got some guests. I've got Andrew and Tillman back. They were on a couple of weeks ago. You guys really sent me a lot of great feedback about them, and so we're going to talk about some more. This idea that we've got. It looks like 16,000 hungry financial advisors about to be unleashed onto the Bitcoin ETFs. What that potentially means. How significant is that? We're also going to take a look. We're going to talk about mining. We just had the halving, and of course, at that point, for a brief period there, transaction fees shot to over $100, and everybody was like, "Oh my God, it's the end of the world." So we're going to talk about that and runes and these kind of things coming up. We'll cram as much as we can in the first half of this show, so hopefully you guys are ready. And like I said, other than that, last half of the show, I'll take a look, Bitcoin and Ethereum and the DXY. We'll look at the S&P, gold, silver, those kind of things to kind of give you guys a better view and idea of what's going on in the market. Before we do, guys, I'm going to say it because I always forget. Please do me a favor, hit the thumbs up, hit the like, subscribe to the channel wherever you're watching this. We simulcast on YouTube, Twitch, Facebook, and X. Follow it, subscribe to the channels if it's somewhere. Leave a comment. Don't be a jerk. It's as simple as that, right? Life is too short. The way I kind of look at it, guys, is if you've got enough time to just be rude and disgusting towards somebody else, one, you need to figure out what hurt you in your life that you feel like you need to do that, right? Two, if you've got that much time, you're wasting time. You could be making money. That's just the way I feel about it. So anyway, good to see you guys checking up here. Let's bring them up here. We've got again Andrew and Tillman here coming in. How are you guys doing today?
Doing fantastic, Chris. Really happy to be on.
Absolutely.
Yeah. Great. Yeah, Tillman looks like it's he looks like he's on the other side of the world or the North Pole or somewhere. It's really dark, and he's got to check it in there.
Believe it or not, I just got a weather advisory on my phone. Snow incoming for Breckenridge. So yeah, it is a different climate where we are up here. It's I'm at about 8,000 feet, so we're still getting snow this time of year.
Yeah, I'm not. We are going to be 80 somewhat degrees today, and I guess I'm okay with that. I guess I'm okay. My son's kind of upset that it doesn't really snow out here.
Yeah.
But it is what it is. We can take trips, right?
Exactly.
So anyway, big thing is if you guys, first of all, follow these guys. I'm gonna have their ats there underneath the video here later. But it's at AP_abacus for Andrew, and then Tillman is at Texas OL 61. I got that right?
You nailed it. Offensive line 61. I played guard for University of Texas. So
yeah, there we go. And I'm not holding that against him. I'm not a YouTube guy, but it's all good. It's all good, right? So anyway, yeah. So if you've been following Andrew for a bit, you'll know he was the guy out there, about a month ago, a little bit over a month ago, saying, "Hey, listen, my contacts in TradFi are telling me that Morgan Stanley is really serious about unleashing their financial advisors because I guess since the ETFs were approved for Bitcoin, if I'm not mistaken, they were allowed to accept incoming requests, but their financial advisors were not allowed to go out there and pound the pavement and say, "Hey, listen, you should probably be in there." Is that correct?
Yeah, so they siloed the Bitcoin ETFs in larger wealth management organizations in a couple ways from the get-go. One was they kept it in their ultra high net worth silo, meaning that if you have an account at Morgan Stanley or UBS, you have to have more than $10 million long at the firm to be able to ask the question, "I want to buy a Bitcoin ETF." And at that point, the advisor is going to say to you as a person with that kind of money, okay, we'll give you access to it, but you got to sign a couple documents that say that we had nothing to do with you purchasing this. We're not held liable. This is an unsolicited transaction. And if something goes wrong, it's your fault than ours, right? So significant barriers of entry even after they've been approved, right? So what Morgan Stanley is doing is they want to be the first sort of big, well-known wealth management name brand out there to make these products available to the entirety of their platform. So not just ultra high net worth, but people have 500 grand long at the firm, $1 million longer at the firm, and advisors can begin talking about it in something other than an unsolicited way. So about 2 months ago, I got notes that were passed to me by guys that work with and were a part of the launch of the BlackRock IBIT product. And some legal counsel inside of that particular group said, great conversations with Morgan Stanley. They're hot to trot. They sent out a bunch of due diligence documents to their advisors on April 5th. And the expectation is that mid to late April, it was going to be done. There was a little bit of bureaucratic back and forth inside of the organization itself. And now it looks like it's going to be May. But the point is that it's coming, and it's coming, a month from now is not a long time. And the reality is Morgan Stanley, and I don't know if people know this, but they're like the third largest asset manager in the world. The JP Morgan is bigger than them, Goldman Sachs is bigger than them, but those are the two organizations that they compete with on the playing field of banking and wealth management. It's better than $1.5 trillion inside of their organization. So it's huge. It's absolutely huge. And like you said in your subject, header for this particular stream that we're doing, it's 16,000 advisors. Morgan Stanley is a huge organization. 15 years ago, they bought Solomon Smith Barney. They made other acquisitions. They used to have about 4,500, 5,000 folks in just under the Morgan Stanley umbrella, but they ballooned into effectively being the largest highbrowed wealth management firm in the country. So yeah, it's a big deal. Yeah, it's coming. And here's the thing too, in terms of that space of wealth management, right? Morgan Stanley, Wells Fargo, UBS, Goldman Sachs, AllianceBernstein. So these organizations are copycats, right? Morgan Stanley, generally speaking, has been the most forward thinking. And that's been the feedback that I keep getting from these sources is Morgan Stanley wants to be first. And UBS is kind of pushed back and said, well, what if we're first? Wells Fargo is also kind of pushed back. Well, what if we're first? So Morgan Stanley wants to be first. And the reality is those organizations will quickly acquiesce. And they have to acquiesce because product and platform at that level is completely commoditized, right? You don't really have pricing power. You don't have product power. You don't have special stuff that other people don't have that doesn't exist in that space. So if you're offering something that people want and is a remarkable performer over the last however many years, we know that, the other organizations can't not offer it, right? So a place like Merrill Lynch, by the way, we shouldn't call it Merrill Lynch. We should call it Bank of Merrill because they're owned by Bank of America. And they do what they say, but they'll probably be the last to come on board. But eventually, they'll offer it even to their Merrill Edge clients, which are people under 500 grand. And it's done all online, right? So that will happen. All of that will happen over the next month to 6 months. And again, so you have this continued wall of access that even if it's a trickle of flows for the Bitcoin ETFs, well, what is a trickle of 1.5 trillion or 5 trillion or 10 trillion with all these organizations? It's still a lot of money, still a lot of flows, right? So yeah, the opportunity still is ripe in the short and medium term, and these organizations coming online and coming online, fairly quickly is important.
So I would echo some of that and add to it a little bit. I think the evolution of the market, is going from a very narrow and deep channel, right? 5 years ago, if you met somebody that was in Bitcoin, they had 80% of their net worth in Bitcoin, right?
Yeah, yeah.
Whereas now you're seeing the path become much wider and it much shallower, right? And so I think the next group of people that you're going to see a major inflow into Bitcoin are what Andrew's talking about, the high net worth individuals that have the presence and the goodwill in their firms to say, I want this, figure out the documents I need to sign. You're going to let me buy it, essentially. And if that's where we are, which it sounds like it is, I think the next iteration will be the widest channel, which will be available to everyone, like you said, under 500,000. But then there's even one that I see beyond that. And so I look at, for anybody who's been in Bitcoin, we measure the beginning of Bitcoin when the first Genesis block came to creation, right? I think we've started an alternate universe timeline. I think the ETFs started a financial Bitcoin timeline that we're still in its infancy. And I think the final stage, if you will, of the widest channel and the shallowest channel that we can onboard is when it's been around for a decade as an ETF, all the big money's in it. And now the firms, without any real risk, can do as an opt-out type of a product offering where it's in every single thing that they push by definition, unless the customer raises their hand and says, I don't want exposure to that, right? So that would be, in my opinion, kind of the final coup de grace as it pertains to how much capital could be flowing in.
And that concept is much like the concept of mutual funds 25 years ago and now ETFs, where if you've got a growth mutual fund or a growth ETF, there are inherent equities that are in a particular position by percentage inside of those products. Right? They have to be. They're demanded by the customers that buy them, because if as a manager or as an organization, you've chosen not to put that into that particular portfolio, you're going to get asked a bunch of questions, or you're going to get, from a performance standpoint, if you have a down quarter, you're going to get fired, right?
What's seen as negligent now will be the opposite of negligent coming up, right? It's going to
funny how that works, right?
It is. Yeah.
Well, think about big institutional commitments or opening up to Bitcoin, right? Yesterday, was another note about Bank of New York Mellon, right? Like, people, that's not a name that's bandied about like BlackRock or Goldman or something, but Bank of New York Mellon is massive.
Right.
They are the custodian of choice for way more people and stuff and banks and institutions than you'll ever know, right? So that type of institution actually buying Bitcoin and Bitcoin ETFs that they, disclosed via the 13F, that's a huge deal, man. That is a massive, massive deal that I want to make sure that people that are listening to this stream understand that you may have never heard of Bank of New York Mellon, BNY, but it's like, it's a huge, massive institution that, is just right behind Goldman or JP Morgan, making sure that all the transactions that are happening at JP Morgan and Goldman Sachs can happen, right? It's a really, really big deal.
Yeah. And I mean, it's kind of interesting when we think, I mean, like Tim was mentioning there, we go from this, this, oh my God, you're negligent for doing this with Bitcoin now. And for us to be able to see in our lifetime, and probably a lot sooner, I think Tim was saying that maybe in the next 10 years or something becomes this, to the point where it's opt out, right? And to see that switch, I think that gets kind of interesting. So, do you guys think that the U.S. government, not that it's up to this point, it's always been about the government's trying to ban Bitcoin, it's trying to stop it, it's trying to do it. I think we can kind of move generally beyond that. But do you think maybe it's become, okay, so it's here, and as with governments, it's always about control. So maybe they move toward this idea that self-custody becomes the bad thing. And, if you want to have access to Bitcoin, you have to do it through ETFs or through, MicroStrategy or Tesla or something like that. Do you guys think that's kind of where we're headed, or what do you
I
think?
think that's a short-term false proposal. I don't think that works, because if the whole world keeps operating on chain, right, and we remove our citizens and financial markets from on chain, that doesn't remove the on chain activity. That just excludes us from the growth potential of being on chain. And so what I look at it is the final coup de grace, and what's going to be the end of the tracks is a CBDC that acts as the on-ramp to on-chain Bitcoin, which does the exact same thing from a control mechanism that they have to have in order to protect the sovereignty of fiat, right? And so, fiat currency, I've said this for a while, and I don't think people understand what I'm saying when I say it, but I still think it's the most effective layer 2.
Okay.
Cash is what we measure our spending capabilities in. It's not in fractions of sats, right? Like I'm not wanting to part with the hardest asset that's ever been created for milk. That doesn't make sense in my mind. And so in my mind, the financial markets have chosen once and for all. When Satoshi launched this, I think that he knew that there were 2 primary drivers in the growth curve. One, developing countries who are excluded from participating in the current markets and their adoption out of necessity in the means to transfer wealth, right? Cash system that's off the traditional rails. I think the second one is the hard asset value. And I think he knew that this inflationary environment was only going to get worse, because if you look at history, curves don't lie. And so you go, where does this curve end up, and what can I create to hedge against this curve? And the mechanisms that he deployed are absolutely perfect for that purpose. They're not perfect for the first purpose. They're great if you're in an undeveloped country. They're the best alternative that you can get. They have the ability to onboard people that are unbanked and make them banked. That is an incredibly powerful notion. But let's assume that modern society continues progressing, and in that assumption, everyone will eventually be banked, right? So is Bitcoin the best means to transfer money for a coffee in the morning? Well, if Satoshi thought it was truly, why does it take 10 minutes to settle, right? Because there were alternatives, so there's just these things that I think that you can't have both and at the same time. And I think the Bitcoin community is divided. And what's unfortunate is it's divided for the purposes of greed. Miners want block size to grow exponentially, right? Because their hardware and their infrastructure becomes that much more valuable, and they become more powerful in controlling where that infrastructure is directed. I think the rest of the Bitcoin community, we would consider to be like the OGs, the guys who were more in it for the exercise than for the money, I think they look at it as protecting the most perfect inflationary curve that's ever been created in the history of mankind, right? It's not something to take lightly that Bitcoin is fairly and equitably distributed to anyone that wanted to participate, the exact amount of Bitcoin that they were entitled to, perfectly over 993 million transactions. That's insane to think about. There is no network on the earth that's ever been created that's anywhere even close to that. So let's listen to the Larry Finks of the world as to why they're engineering wealth products around this as a hard asset, and go, you know what? It's time that we kind of give up on this. We want it to look like Ethereum, but act like Bitcoin.
Yeah.
You can't make those two things happen without sacrificing something. And the things that we would be sacrificing, in my opinion, are the highest and best use of anything that's ever been created in the hard asset category, right?
Yeah, and I think most people actually agree with that. Again, even those that discuss using it, as currency to buy your coffee or something like that, they're still very much aware of the hardness of the asset.
Mhm.
And yeah. So yeah, it's just gonna leave it there. I was gonna say something else, but I think I'll leave that there. But so when we talk about this, and we talk about not just the time, there is the transactions, right? And so we just had the halving, and almost immediately after that, transaction costs jumped up over $100, and all of a sudden, pasted across social media was the end of the world. And those like Peter Schiff, who I have to believe a lot of it is engagement farming, but he jumped right on it. Oh yeah, you think it's so great? Here you are paying over $100 transaction, blah blah blah. And of course, that's dropped back down now. So as far as mining goes and transaction fees, and now we've got runes that are popping in here. What do you guys see as far as how that's all going to interact? Because we know as the happenings continue on, the rewards for doing so become less. And the whole idea was, okay, well, the rewards for doing so become less, but the transaction costs are supposed to kind of compensate for that, right?
Yeah.
And
I
so
think
go ahead.
I think runes are a short-term solution to a long-term problem. Incentive to mine is a long-term problem. We have to address it as a community. There's a reason why it's called a decentralized network, because the intention is for it to be decentralized. And the larger block size that we choose to put on layer one, the more money you have to spend to host transactions. You have to build a computer that costs you $5,000 versus a computer that, when at the beginning of Bitcoin, you could run on a dial-up and a Raspberry Pi. So, we're changing who gets to participate in the network. And that's what the argument should be about. Because in my opinion, if we take Bitcoin for its primary usage, there was a great tweet that Andrew made that I think he retweeted from somebody about this analogy of there's an airport, there's a casino in the airport. It's the loosest casino in town. And you have a lot of the airport says, if you want to play in the casino, you have to buy a ticket that gets you through security. And so you have a lot of people coming into the airport with buying tickets to fly, but the primary use of the airport is actually going the opposite direction of where you want it to, right? Less and less people are entering the doors to fly in airplanes, and more people are entering the doors to play slot machines. So what ends up happening, and what we're seeing with the runes, is now there's massive traffic jams approaching that airport, and it's a bunch of gamblers, and people are missing flights because there's gamblers that want to get into the casino. Well, you do that enough and another airport will be built. Mm-hmm. And a fork will happen. This is inevitable. So if you want to use layer one for those purposes, and you're a big casino aficionado and you want to be a part of that community, then go for it and use the layer one the way that it is. But they're competing interests, right? You want an airport to be an efficient transactional throughput for very important people. What if Elon Musk is in the traffic jam trying to make the flight and he can't get out, and the deal that he was going to cut? So the value of Bitcoin as being a hard asset is the value of an operational airport, right? And we don't want to mix the value of an airport and a casino, even though it might look really good from a numbers perspective and from an incentive perspective for airport owners.
Well, it's the concept of, and Tillman mentioned this earlier, why attempt to try to turn Bitcoin and make it have Ethereum and Solana properties? That's bastardizing, what Bitcoin is and what it should be. The hardest asset in the world. And so, turning it into I'm an analogy I like to use is, there's a difference between Hill Valley and in Back to the Future 1 and Hill Valley and Back to the Future 2, right? It was an entirely different place and quite problematic, right? Like Biff Tannen had caused real problems. So, Tillman and I are in agreement on this, that, we're not fans of runes and some of that stuff. We don't think it's useful. We think it's, here's what I really think. I think it's people in the space that are bored with the truth of Bitcoin at 63 to 64,000. It's range bound. The halvening's over. The Bitcoin ETFs are over. Well, and I've owned Bitcoin for 6-7 years. I don't have anything else to do. Let me goof off on layer one. Like that's not useful. It's not helpful. And that airport analogy, I don't know. I kind of like my Hill Valley analogy too. It's a real thing, and over the longer term, it can be a real problem. My best guess is that as the ownership of Bitcoin as a hard asset grows percentage by percentage at the likes of BlackRock, etc. I don't know. They may have a say as to the games that get played on layer one, I would think.
Well, you don't have to. They're not left to it. It's literally a soft fork and a hard fork decision. It's like, we're not doing this anymore, and we just fork all of our technology in the way in which we determine we're going to do it. Which Satoshi took these features out, by the way. This isn't development. This is revisiting former development. This is another trip around the merry-go-round. And like, if you were in the 2016-17 cycle and you saw
we lost you for a minute.
You saw the Bitcoin Cash division, right? This is it all over again, right?
Mm-hmm.
Bitcoin.
You're gonna make some enemies right now.
Well, listen,
Bitcoin Cash.
Convince me otherwise. I'm for truth. I want to know what I don't know. So if I'm wrong, I want to know. This is just, I've been around for a long time, and this is what I've gathered as my truth. I was a miner, and when I mined, it was a lot easier than it is today. And let me give you some things to point into the closet on this. Okay. Here's my analogy as to how bad it is. Okay. Let's say that gold and Bitcoin are the same thing in this equivalent analogy. Okay. So the gold mining industry requires big equipment, huge ute trucks, massive excavators, crane, all sorts of stuff, rail cars. What if all of the equipment manufacturers that produced all those heavy pieces of equipment were the only people that produced them, and they all got in collusion with one another, and 95% of all heavy equipment was produced by 3 companies out of China, and they said, you know what, we're not going to sell our equipment for the static price of margin plus cost that we used to. We're going to sell it against the gold price.
Yeah.
And so gold goes to $20,000 an ounce, and now an excavator that would cost you $2 million now is costing you $20 million. That is what's happening in the mining space. And so why is it happening? Well, to compete in the mining space right now for profit on chain, you have to run ASICs. ASICs have a lifespan of 4 years. Every halving, they become half as valuable as they were before, and that doesn't pay the bills to keep the electricity going. So it becomes a big paperweight at the 4-year mark, and the 95% controlling interest in those equipment manufacturers determine where you get that piece of equipment in that 4-year period. So if you get allocation, and I've paid Bitmain for huge amounts of miners, and they don't give me a guaranteed drop. They don't give me anything. Mm-hmm. I wait, and I'm patient. And sometimes they send me broken machines. Sometimes they send me used machines with dust all in the interior. And these are real examples. I've done it. I've seen it myself with my own 2 eyes. But when you get that, let's say you get it a year after you expected, which is not hard to imagine. If you've ever ordered from Bitmain, that's kind of common practice. Well, you've lost the most valuable year in the 4-year cycle as it relates to that hash power and what you're contributing to the network. So your ROI has just been blown to smithereens, and you're just subsidizing the security of the network at that point. So if we know that we're just subsidizing the security of the network, Why wouldn't we reduce it to the least expensive piece of equipment for us all to use? So I think Bitcoin will evolve to the point where the companies like Michael Saylor, and I actually just saw Jack Dorsey, bravo to him. He just said that he's going to create a miner. Now, I think he's a little misguided. I wish he wasn't going for the ASICs, because we've got 93% of the Bitcoin that's ever going to be mined out of the ground. So we don't need to keep chasing exponential curves that don't produce exponential returns. So my point is like, I think the future of Bitcoin will be secured at a much more granular level. I think every household electronic at some point will be contributing hash rate to a public blockchain. And Bitcoin is obviously leaps and bounds ahead of everyone right now, and that would be my best bet. But I think the future will be where manufacturers that have a refrigerator have a little micro miner in the back of it. And why? Because now you have the most secure network on the face of the earth, and it's untouchable. Like, you're going against concentration to deconcentration, or de-risking the network. And you don't have to compete with those three manufacturers that have a 15-year head start on R&D to create the most powerful ASIC. You're just back to square one, and you're just broadcasting it. And the idea I came up with that would be the most practically and easily implemented was, X gives you premium subscription benefits, right?
Yeah.
Just have people buy a $50 miner, and as long as they have that plugged in, they get premium. All the contribution of hash rate and the mining efforts goes to Elon and X. And then X gives you an orange check mark instead of a blue one. You would have everybody in America buy one of those miners for $50. And then now you have 300 million node points that nobody can play funny business against. There will no bad actor will ever have any incentive to even pursue those efforts, because there's no way they could overcome them.
Man, that's an absolutely great thought. I love that idea. Yeah, you definitely have to give some sort of benefit to those, because I'm not gonna host your miner on my refrigerator and pay the little bit of extra electricity or whatever for free. But yeah, I think that would be an amazing approach to it, and really kind of, because everybody's concerned about that concentration of hash power and whatnot coming through, and so for different reasons. Some people just because of Bitcoin in general, some people because, oh my God, it's if it's concentrated in China, then China politics kind of determine what's going on in the world and stuff like that. So yeah, I like that idea as well. But we are about here, guys. You got any final thoughts?
Well,
no, final thoughts are.
Oh, sorry. Yeah, thanks for having us. Just final thoughts are, small, short term and medium term. You've got traditional finance and wealth management, about to barrel into Bitcoin. Long term, Hill Valley, Back to the Future 1, Back to the Future 2, right? So let's try and get it figured out. And I'm always amazed at Tillman's kind of big brain on all this mining stuff. It's remarkable. It's hard for me to keep track of, but he lived it, and so it's really cool stuff.
Any final words there, Tillman?
No, thanks for having us. It's a lot of fun. I love bantering about deep Bitcoin things and economic things. So really, really a pleasure.
Thanks, Chris.
Hey, man, I appreciate you guys being here. You were on a few weeks ago. Everybody loved it. Was talking about it. We're able to get you back this week here. What I love is the TradFi understanding and breaking that down for our viewers, as well as the actual mining experience. It's not somebody here saying, "Well, listen, I've looked at the papers, and here's what I'm deducing." You've got somebody that's actually been a player who's actually been in that, and they've seen it change from where it was to where it is now. And I think that gives, between those two approaches, really gives us this unique kind of insight into, the potential for Bitcoin and where Bitcoin's headed here over the next, not even just, 2 years or 5 years, 10 years, 30 years down the road, which hopefully we'll all still be around at that point.
Yeah.
But yeah, man, really love having you guys here as always. You know what? Hey, listen, I do those spaces with Gary Cardone there on usually on Tuesdays. Yeah. Man, if you guys got time sometime, I'd love to get you guys on there. I think Gary would be all about this just because of what you can bring there. So
Sure. Be awesome.
Absolutely. I actually was in the audience listening to y'all the last spaces. So yeah, we'd love to. That'd be great.
Fantastic. Great,
Yeah.
great. Well, I'll get with Gary about that and Greg and get you guys figured out in there. All right.
Much appreciated.
I'm sorry, what was that?
Much appreciated. We'd love to do it.
Definitely, definitely. Love having you guys on. Thank you so much for showing up as always. Listen, guys, follow them. Andrew is AP_Abacus, ABACUS. He just couldn't do something easy like Andrew 123 or something, you know. Gilbert's laughing, but man, you know, Texas OL61. So, you know, I'll put their handles under here for X there. You guys can follow them on there. Lots of great information as always. And we'll definitely have you guys back again. All right.
Awesome. Thanks, Christopher.
Thanks so much, guys.
Yeah. Bye.
Take care. All right. What's going on, everybody? I see Fibbo just joined in. What timing? He says, traveling, just checked in to say hello. These guys are fun. I will be replaced. No. And if you guys are waiting, you know, Fibbo had some stuff coming up over the last few weeks, but we are scheduled to have him on here on the 10th of May. So that's coming up in, what is that? Just 2 weeks from now, guys. Okay. So I know y'all are jonesing for some Fibbo, but follow Fibbo. Follow Fibbo on Twitter, right? He's checking in from his car. Well, hopefully he's not trying to watch while he's driving, right? So anyway, hopefully you guys are loving this. You know, I'm looking at possibly turning this into its own show. Maybe you guys can give me some feedback on what you think about that. So we can do like, you know, normally just the chart things that we usually do on Fridays. And then throughout the week, I don't know if I have the bandwidth to do it every day, but maybe a few times throughout the week, we can have a half-hour show or bring on guests and kind of talk about, you know, like Andrew and Tillman here, or, you know, we had Juan Leon last week from Bitwise. You know, maybe I can get Alex Kruger on here. Alex, a friend of mine, great guy, really great macroeconomic takes as well. If you guys don't follow him, you should be. But let me jump on here. Let's see. His Lambo sat says. All right, guys, let's jump over here. Let's look at what's going on here. So let's jump with Bitcoin first. Oh, let's do something better here for you guys. There you go. How about that? Yeah, so I mean, here is the 4 hour, basically just kind of dipping down into this wick here. 50% retracement of this full, you know, the idea this is a 1 here and this is a 2, right? So that's what we're looking at. And then potentially a 1 and a 2 here. If we zoom in a little bit, let me show you guys something. So I posted a chart earlier where I was talking about it looks like Bitcoin may be headed up to rally today and into this weekend. So this is what I'm looking at. I'm looking at one wave up, and then we're looking at A here, B is a triangle, and then C. We had this nice dip and this great candle. It got rejected right up here at the swing high, though, and came down. So this looks like it becomes an ABC. So a W and then an X, and then we've got an ABC here as a Y. We pulled back 78.6%. So what you guys are looking for right now is a breakout above this swing high here at 64,790 and 41 cents here on the Bitcoin all-time index. So whatever chart you're looking at on the 1 hour, this rally up before the pullback, you're looking for a breakout above that rally up. If we can get that, your initial target is going to be this R1 hourly R1 pivot area. So, you know, guys, I never guarantee you something's going to happen. I always talk about things look like this. Here's our, you know, validation level. Here's the level we need to break through to add confidence to the idea that's what's going to happen. And if it doesn't, then we look lower and we kind of invalidate it, right? But as you can see here, 3 waves up off this. If we go 1, 2, and 3, 3 will get us around 67,484. 5 will get us around 68,501. And that, of course, is minimum expected targets there. You know, again, when we do Elliott wave, we have the initial target. Wave 3 is the 1.618 extension. So it's 161.8 times the height of wave 1 from where wave 2 ends. That's just the initial target. That's often, most often, where price kind of ends up around. But it can always go higher to the 200%, the 2618, the 3618. But this is what we're looking for. If we can do that, things are set good. We also have this as a, you know, this bigger kind of count here. So this being a 1, as I mentioned earlier, and a 2. So we need, again, if we break out above that swing high right there, that gives us a target. That'll take us above this swing high, which is 67,175 and 49 cents. And breaking out above that gives us this larger 1, 2, 3. It adds confidence to that. And finally, the larger count, of course, this right here, right? The idea here is a ABC right here. So the breakout above this swing high up here on this chart here is 72,756 and 63 cents. We'll add confidence to this larger count. Okay, so it all sets it up. It's nested 1-2s inside this bigger picture. If we're looking at, let me zoom out here a little bit for you. So I've talked about the idea that, I like ranges, guys. For me, my preferred way to look at this is this range. And basically what that gives us is a spring here, a rally up, a pullback. Here we go. And so, looking for this rally up higher, right? So that's my preferred thing. But for most of y'all, I think you prefer the bull flag, which is just a descending channel. So we have resistance to support to resistance to support. It's a really good, strong movement, which is what you want to see, okay? If you're looking at patterns, guys, let me tell you this. A lot of times you guys will, reply to my comments or, my post there on Twitter or something like that. Or you'll send me a DM asking about something, right? And when we're talking about patterns, if you want to increase the odds that your pattern is more likely to play out, what you're looking for is impulsive, strong movement between support and resistance, right? This is what you're looking for to do that, right? The more price kind of just, hangs out at one end and then jumps up and then hangs out at the other end or hangs out in the middle, the less strength that pattern's going to have. So I tell you that because this is a great, this is nice strong movement down, nice strong movement up, nice strong movement down, which to me, when I'm looking at this, increases the odds that this is going to play out as a bull flag and get the pop out. Okay. So you can, if you're just looking at this larger term picture, you can, wait for the breakout here. You can also look for an impulsive breakout above this descending resistance. So this descending resistance gives you 1, 2, almost 5 touches here along the way. This is a trend line. Okay. 1 point is just a point. 2 points create a line. Okay. 3 points or more is a trend. And what you're looking for when you're saying, okay, well, if price breaks out or breaks down below here, is it going to be significant? What you're looking for is more touches on that line. The stronger that trend, the more touches you have, the stronger that trend line. It's not just a line. Lines get violated all the time and come back, right? It's not what it's about. Look right here. You've got a line right here, right? It was 2 points, violated back up, kind of 3 points. But your trend line, that's what you're looking for. And so if you can get an impulsive breakout above this, probably around 65.5, 66,000 by the time it gets up here, you're looking for a large candle spread, large spike of volume relative to the volume in the candles around it, okay? Not relative to everything. You don't need volume above these levels, right? You just, whatever the volume is as we get toward this level, you're just like, this is a spike of volume comparatively to the volume here, you see? That's a larger, candle spread compared to the candle spreads locally. So that's what you're looking for on the breakout here. And if you can get that, most likely the target should be your resistance here, your bull flag resistance. And most often what you get is a rally up there and a pullback and then the breakthrough into that, new all-time high kind of area. Okay. So that's kind of what we're looking for. It's just a little education there on patterns and trend lines and what you're actually looking for. Again, guys, if you're following me here, even if you don't join TWC Trading Academy, the fact that you're here listening to me, I want to give you something that you can use, right? This is real stuff. These aren't half-truths. These aren't outright lies, which a lot of what you get for free online is going to be. I want to give you real stuff that you can use effectively out there as a trader, okay? So pay attention to those things, but this is what we're looking at. So basically, what we want to see is, I was talking about the idea that maybe we could see a rally up through this weekend. And so what we really want to see is price to hold support down here right now around 62, 773.42. If we can keep from breaking down below that and we break out above this 64, 790 and 41 cent area here, we can stay above here and break out above here, the odds are a lot more significant and much more likely that we're going to have a rally through the weekend. Now, that doesn't mean it's going to be some mind-blowing, $5,000 rally or anything like that, but it means we should have upward movement through the weekend, okay? And that's what we want to see. Now, if we do break down below the swing low here, that doesn't negate the fact that maybe this is a 1 and we've got a 2. It just means, okay, we may pull back further. And that's where we start looking down here at 62, 473.5, 61, 818, and maybe this 61, 213 kind of area. Those would be my targets to the downside. You just need this to hold, guys. That's all you need. If this holds and we break out, if we keep this here, if we're breaking down further, we've just got to break out basically above the, this swing high right here at 65, 292. If we break down further, because that'll suggest we've got an A or W, B or X, and then Y or C here, right? So instead of having to break out above up here, you just have to break out here, much lower, 65, 292. And so that would be like a 1, 2, and then, you'd have your 3 in progress. Here's the thing, guys. A lot of times, newer traders who really don't know what they're doing in the market, and this is the hard thing for y'all. You have to admit to yourselves the truth, right? Where are you really at? If you are not consistently profitable, don't lie to yourself and say you are, because what it's going to do is it's going to force you to continue making the same bad mistakes you're making and losing money. And I don't want you to do that, guys. Okay. I don't want you to do that. So you have to really be honest with yourself about how are you doing? What do you really know? Because what happens is most of the time, people that I'm talking to here, whether it's on stream here or on social media, don't know what they're doing. Okay. I'm honestly, you might have a couple ideas. Okay. Well, if it does this, then, maybe this, very limited or no real idea, because a lot of the information that you're going to find online, as I mentioned earlier, you're going to be half truths and outright lies. It makes it really difficult for you as a new trader to get out there and try to figure out, okay, what the hell am I doing? Okay. So, when I bring that up because some of the feedback I get sometimes is, well, you say, oh, it could go up or it could go down. Yeah, because I'm trying to give you information. It doesn't matter what I really think it's going to do, right? How am I helping you if I say, listen, I think it's going to do this and go here, and that's all I give you? I'm not helping you out unless it actually does that. But I'm not out here to tell you that I know what's going to happen. I don't know. I have an idea of what I think is going to happen based on my 30 years of experience and all the education I have in trading and markets. But I'm going to be wrong a lot of times. Okay. So it's important to understand, and you need, I want you guys to learn this now. You want to be able to understand, okay, well, where is my validation level? At what point, at what level does price have to go through to make what I think more likely than not to happen? And if it doesn't do that and it goes in the other direction instead, at what point does that invalidate what I'm looking at? And so this is what I give you guys, okay? So before you ever come up with the, it could go up, it could go down nonsense, right? Because I'm going to tell you right now, any professional trader out there is just going to shake their head when you say that, because you're letting everybody know that you really don't know what you're doing, okay? And that's not meant to be disrespectful. It's meant to be truthful, because I want you guys, if you're not truthful with yourself, much like in life, you're going to try and live a lie. And trying to live a lie ends up hurting you in the long run, okay? Really, with trading, because we're putting money out there all the time, right? So right now, I'm looking at this as a 1 and a 2. Right here, I'm looking at this as a 1 and a 2. And this right here, right, as potentially a 1 and a 2, or you could even look at it as 3 and a 4. Either case here, it's got the same validation level you have to get through, okay? So what does this mean? So we're going to go back. I'm going to tell you one more time here, okay? As long as this holds here, as long as we don't even wick down below it, even 1 penny, as long as this holds, we need to break out above whatever chart you're looking at, this swing high here. On this chart, it's 64,790.41. If we break through that, that's our validation level. At that point, it says that this is likely going to be 1, 2, and we have a 3 up here, minimally at 67,484. Okay. Doing so will take us out above this swing high. Like I said, as long as this swing low, pulling back over 50%, almost 61.8, as long as that stays in there, this looks like a 1, A, B, C, and then a 2 here. So wave B is what we have to get out. Same here, wave B or wave X, okay? But hitting that 67,484 and 82 cent level is going to pull us above this swing high here at 67,175 and 49 cents. So if we do that, now we have our larger count, right? This is interior. This is 1, 2, 3 here of 1, 2, 3, right? So it's wave, well, it's wave 3 of wave 1 of wave 3 probably, okay? What I'm saying, it's interior. But once we break out above here, now we can go, okay, well, now we've got 1 coming up here, right? We got 2. And so now breaking out through this, again, none of this ever guarantees. There are no guarantees in trading except that you will lose money from time to time. And the newer you are, the more money you will lose and the more often you will lose it. I am not talking about new just in time, like you just started trading. I'm also talking about new as in you are not consistently profitable. You lose a lot more money than you make. You're still new. You haven't figured it out yet, okay? But again, the great thing that I teach everybody is that trading isn't rocket science, guys. You don't have to even have a high school diploma to be an exceptional trader. You don't. But you have to be honest with yourself, and you have to pay attention, and you have to have, you have to be disciplined, you have to be focused, you have to be consistent, and you have to practice correctly, right? And you got to be patient so that you can build the skills up. Like any other thing else you learn to do, you got to build your skills up, right? So again, once we break out above this, then also we can go, okay, well now that is the validation level for this 1, 2. And so we break out above that, and that says, okay, this larger degree 1, 2, 3 has a minimum expected target of 76,374. Okay, minimum expected. I think because again, there's a record number of hedge fund shorts here, like stupid how many shorts are here, right? How much money in shorts is here at around the 73,000 level. So I think if we pop through that, I really think we kind of catapult into the 80s. So the idea is obviously, I think we're going to get, I think we'll go up beyond this almost 80,000 level. I think we have probably a closer target of 86,214 maybe. But we got to break out above this swing high up here at 72,756.63. That's our validation level. Well, actually, this is here for this larger account here, right? So that's all we're doing. We're looking at the validation level, and as long as the swing low holds, that's what we're looking at. But again, right here, if we do happen to drop down below this, all that says is this is not 1, 2. This is probably A, B, C. And again, you look here at 62,473.5, 61,818, 61,213. Those are kind of the areas you would look for a reversal if you break down here. And then you just have to get above this swing high here at 65,292 and 95 cents to say that this 1, 2, 3 is likely in progress. Okay. We don't need to talk bearish count so that all are aware. We don't need to. Why? Because we haven't broken down. You guys, listen. And this isn't John there. This is not, anything like specifically at you or anything or saying, anything bad about. But the reality of it is, guys, is we are bullish. Until we close below this 60, right here, I guess 59, 173 and 92 cent level here, until we close below that, we're still bullish. We are bullish market structure off this swing low down here, off this 2022 bear market swing low. And I point this out because you're going to get a lot of people online that say, oh, we got to talk about all these other things, all these possibilities. You have to have a bearish candle if you have a bullish candle. No, you don't. No, you don't. You need to focus on what's important at the moment. That's what you need to do. Right? And so since we are still bullish market structure, since we have not broken down, to break that bullish market structure, you don't have to assume that it's bearish. Okay, guys? And I hope this makes sense. Again, we're not, I'm not here to I don't know, talk ridiculously to you, right? I'm just being honest with you, because you can get caught up in trying to worry about all the other stuff that at that time doesn't matter, right? If you're talking about larger picture here that we've got here, well, that's what you need to break down. Until you do, you're just sideways. You're still bullish, okay? If you talk about lower counts, well, what I just talked to you about, swing lows here. I told you the swing lows have to hold support, right? If they break down, well, then you got this right here. If this, in order for this to remain 1 and potentially a 2 here, or if it broke down 2 here, we have to remain above that swing low, right? If we break down below this swing low here, then the idea is, as I've talked about before, is one of two things. One is we could get, like we got the breakdown traders here, right? They were caught here. They were caught here. They were caught here, here, and here. These are the breakdown traders, left wicks everywhere, right? Or in this case, a little wick, but a large bullish engulfing candle. When you see these large, by the way, guys, real quick here, God, I can give you so much here. When you see these, like this, you've got this downtrend here, and you have this big, large down candle, and then you have a big, large up candle. Treat those two candles together like a large wick. Okay. So basically what you're looking at is you got a large wick here, effectively a large wick here, got a big wick here, got a big one here, you got big wicks here, and especially here. Structurally, what that tells you is there is a significant amount of demand in relation to supply, okay, in this area. And it's continued to hold up since back here on March 5th. Well over a month and a half. And it's not weakening, right? It's not, you're getting a low here and you got a higher low here, right? So the idea is to pay attention to the structure as far as what's going on there. You don't have to, and here's the reason why. Again, I talk often about market and trader psychology, right? The problem when you start really going, oh, well, we have to look at all these other things, right, is that psychologically and emotionally, it makes you less secure. Okay. And what that does is it starts making you doubt what you were already looking at. When you're trading, you have to have clarity. You have to have decisiveness. You will not make it as a trader if you're always wishy-washy. Now, wishy-washy is not, oh, here's the validation level, here's the invalidation level. If it goes down here, if it goes up, then here. That's not wishy-washy. That is decisiveness. It's saying, listen, if we break through this level, we're going likely up here. But if we don't do that and we break down through this level here, then we're likely coming down here. That's decisiveness. That's not wishy-washy, right? Wishy-washy as well. Yeah, so I want to be bullish, and it looks like bullish here, but what if it's doing this bearish thing? And now I got to go and go, okay, well, here's a bearish count now. And I don't know, right? I want to be bullish, but I don't know. That's what that does to you. So you want to look through, your clear levels of understanding. And that only comes, guys, unfortunately, that comes with experience, that comes with learning how to do it, right? There's a reason I teach the specific types of trading that I teach, and I put them together in the way that I put them together, right? Because it gives you the best kind of look at what's going on, so you can get more decisiveness. Once you get used to it, once you practice, it doesn't happen at first. Okay. So yeah, this is what we're looking at. Ultimately, we're range bound over here. We're in the bull flag, if you want to look at that, right? So what could happen if we do drop down below this swing low? As I was trying to say earlier, is we very well might just get a touch of that ascending channel resistance, maybe right here around 57, 57.6, somewhere around here. My first thought is we would just get a big wick down there. Something like this would be here. Trap the breakdown traders and use them as fuel to fire up. That's my initial scenario, is that's what it would be. And why do I think that? Because looking at price action and volume through here, especially as we're in this area, there's a lot of volume overall that's staying heightened in this area. Telling us there's a demand sitting there, right? And we have all those shorts up there around 73,000. So we're going to need some real fire to push through it. So it's possible we could see that dip down. But if we continue going down, as I've been saying, then we're going to look at this 51,000, 52,000 area as the next target. Okay. We don't need counts for that. We just look and say, okay, well, that's what it'd be, or down here. So we got our targets, right? We're pretty easy. They're set. Let me see here. Let's see. What is that? Grateful MJP, watching about 15 minutes behind. Please have Tillman and Andrew back on. Such a good show. BT3 beards times 3. Yeah, right. Maybe I'll just start a new show. We'll call it Beards and Bitcoin. And only if you have a beard can you be on the show. I need to go see all the people I know, see if everybody's got beards. I thank you for the feedback. I appreciate it. Everybody, like I said, loved them. A couple of weeks back when they were on. I think they really bring some great insight. As far as mining and TradFi goes. How it relates to Bitcoin. So great. So John, yeah, like I said, that wasn't anything to like directly at you or anything. But I hope it makes sense, guys. Again, what I'm trying to do is just explain to you guys how we trade, right? It's not enough to just know how to use the tools. Like, people can know how to do Elliott Wave, or people can know how to do Wyckoff. But as a trader, you have to understand, how do you approach the market? How do you approach the trade? How do you approach trading in general? That's the real skill set. Anybody can learn, can memorize rules and guidelines and whatnot on how to use a specific tool, a certain method, right? But how you approach the market is what's going to really kind of determine how well you do. So that's just, these are my thoughts doing this for as long as I have. So anyway, so that's what we're kind of looking there. So we'll see what happens. Big picture, guys, zoom out. Look at this big picture. Here's the big picture. Let me get rid of this stuff real quick. Big picture is, this is what we look like. We had the channel here. We broke out impulsively. Most of the time when you get that says you're continuing higher. It's not usually just a simple breakout and pullback. It could be, but usually it isn't. You can see that the pullback here is the same resistance level we had at the orthodox top, right? Because you remember tops are ranges, right? But you can see all this resistance in the same area here, as well as support and resistance here. And that's where we found support. We're in a bear flag. Effectively, we've almost retested that ascending channel resistance as support. Like I said, if we did break down, my thought is we would probably do that. But until we do it, we shouldn't be thinking, oh my God, we're going to do it. Okay. Which means the other part of it is you have to have proper risk management, guys. You absolutely have to do it. Fibbo, myself, and Gary Cardone will be talking about proper risk management when Fibbo's got some time. We were supposed to do that yesterday, but Fibbo's got his things he has to take care of, unfortunately. But once we do, we'll do that. And you guys are going to want to watch that, okay? So here's Bitcoin. And by the way, here is the weekly. Look at the weekly, guys. Look, again, the demand showing up in these wicks here. And then we have this doji here. And usually when you have a wick, you're going to break down, usually about 50% into it. Or if you have a wick up top, usually 50% into it before you pull back or before you continue on in the direction. Most of the time, doesn't always happen. But a lot of the time, most of the time, that's what you're going to get. You're going to pull back into that wick before it continues on. Right now, that's all we're seeing. Right now, the R2 pivot on the weekly is holding as support. Right now, Stoke RSI is resetting and oversold, but that has to stay down there by the end of Sunday, UTC. So we might get a reset in there, right? Every time it resets, rallies up, right? What you would expect. So we'll see. We'll see how the weekend goes. Okay. Again, we could pull back a little bit deeper into it, invalidate the local 1-2, interior 1-2, get the larger 1-2 still in progress though, and go, after the weekly close. So we'll see again if that local swing low holds. Okay. But I mean, this is what we're looking at. This is all we're looking at. The expectation should be for further. By the way, one more time, guys, I want to point out structurally, when you have pivots on here, just traditional pivots, you move in sideways between the pivot and the R1, and you move up impulsively through the R1 into the R2, almost in the R3 like this. Most often what you're going to get is a rally through the R5. This is a very aggressive move, this sideways and then impulsive move through the R2 like this without coming back down and testing the pivot as support. Just completely ignoring it. You're not even coming back to your area right here. Most of the time, this leads to continued impulsive action up through the R5 pivot. So again, I think minimally, even if you don't like the big targets a lot of people are talking about, and even I've talked about, you should be looking at 117, 118, I believe, at least with Bitcoin, okay? So just different ways to kind of look at this, different time frame, but that's the big picture. Zoom out, guys. Don't get caught up in the 15-minute overlapping sideways, price action, range-bound stuff, because that's going to drive you nuts. Unless you're trading that small time frame. Okay, then trade the small time frame, but don't look at that small time frame and extrapolate what it means on the 1 hour, what's going on the 1 hour, to what it means on the weekly. Does that make sense? Or even the daily? Does that make sense, guys? Okay, let me get through some of these charts here real quick. Ethereum, USD, nothing's changed. We were talking about this last week. Again, I think we probably have a 3 and a 4 here. We've broken up above the EQ of this. Again, another bull flag here through the EQ of it. Pull back to the EQ, retesting its support, the S1 pivot here on the daily. If we can get an impulsive breakout above the channel resistance, the flag, that should indicate that we're done here and we're going to rally up. Breaking out above wave B here at 37.29 is going to add confidence to this count and gives us this wave 5 of 3 minimum, expected target based on the height here of wave 4 at 5,100. And then if we use the guidelines for the pullback for wave 4 and the rally to wave 5 of 3, then based on that should give us about a 63.50 target, right? I'm not talking about emotions. I'm not talking about what's going on. I'm not talking about the SEC. I'm not talking about any of that. I'm looking at the chart. So what's our validation level? Impulsive breakout, or our first validation level, impulsive breakout above channel resistance, the bull flag, and then the breakout above this swing high here where this wave B is. Okay? Dollar, guys. Dollar. Let's see here. Whoops, wrong one. This chart. Still watching for this to kind of work out here, right? So basically, we've got 1, 2, 3, 4, 5, and then 1, 2, 3, 4, 5, right? So we're going to see if this holds here. Yeah, so this becomes a 78.6 of the initial push here. Actually, we could probably, maybe even that's a flat right there. Then it becomes almost 100% here, okay? So looking for this, if wave 2 is broken here, right? If this 107.05 is breached, then we'll look up here around 108.56, 109.94, or even 111.24. That's the 61.8, the 70.5, the 78.6. Those would be my targets. And we would just say, okay, well, again, this would be 3 here. This would be 4 as a triangle. And this would be 5 of 1 here. And then this would be A, B, C here for wave 2. Okay? if that happens. Now, locally here, it looks like we've got A, B, 1, 2, 3, 4, 5, C. Okay, so A, B, C is 1, 2. A, B, 1, 2, 3, 4, 5 is C. Okay, so 1, 2, 3, 4, A, B, C potentially here, or maybe it's like an ABC and then ABC for WXY here, but that gets us 5. So it looks like it's a leading diagonal. And then potentially an A, a B, and a C is a flat. Notice we're getting rejected at the current hourly pivot. Looking for it to break down further right here. This gets invalidated if we break out above 106.325 here. This is the dollar futures chart, so it might be just slightly different than the DXY chart. But these are the futures on the ICE exchange, okay? So if we do break down here, uh, 104.470 minimum expected wave 3 puts us right in the middle of this huge fair value gap here. 5 down gets us about 104. Fair value gap is way down here. The fill is about 103.941. 0.915, sorry, right here. So the odds are if we're breaking down into this fair value gap, we'll fill it up down here. We'll overextend a bit on that. And let me see here. Look at them go, guys. These are the E-minis for the S&P. Locally, looking at this as an ABC as a W, X, and then ABC as a Y. So 3-wave correction. First validation level is an impulsive breakout above this descending broadening wedge resistance. The second validation of the real one we need for the count is breaking out above 52.85. If we do that, that should say we're rallying up minimally to 55.77 and 50 cents. Again, that's based on the height of this correction here. Give us that target, okay? I was wondering if 16,000 financial advisors are about to be unleashed on the Bitcoin ETF, 0.016 million. What are you wondering? Sorry, John, I'm not following what you're asking there, bud. The 16,000 financial advisors are Morgan Stanley. Morgan Stanley, that's why we had Andrew and Tillman on here. Andrew broke that about a month ago. His connections from his old TradFi life were letting him know, hey, this is what's going on here. Likely to come out. It was pushed back a little bit, but the reports now are saying that Morgan Stanley looks to be allowing their financial advisors to approach their clients. Right now, if you were a client of Morgan Stanley and you were siloed, as he was mentioning, in the ultra high net worth, which means for Morgan Stanley, you had to have like 10 million with them. And then you could approach the financial advisor and say, hey, listen, I want some exposure to Bitcoin. Morgan Stanley right now is looking to go ahead and say, listen, financial advisors, go ahead and go out there and pitch Bitcoin. You can pitch Bitcoin to your clients if you'd like to. And so that's what the 16,000 is, which is huge. It's, as Andrew was saying, it's over a trillion dollars, $1.5 trillion of wealth they hold in there. Third biggest behind what do you say, JP Morgan and oh my gosh. The other one, I can't think what it was at the moment here. You guys can watch back at the beginning here. He'll talk about it. But yeah, it doesn't guarantee that everybody's going to come in. It's going to be this avalanche. But the idea is now you got 16,000 potential people out there pitching Bitcoin to all their clients, to that 1.5 trillion worth of wealth. And so even just a very small bit on average coming in, multiplied by all that's a possible, it could be a huge bit coming into it. And the bigger thing from that being, once they do it, like he said, all the products, when you're at that level, when you're doing that thing, nothing differentiates you from the next guy, right? Other than maybe fees or something, or what you allow your people to invest in, or what you allow your RIAs or your financial advisors on the RIA platform to pitch to their clients. And so what happens is Morgan Stanley does this. All of a sudden, other people that aren't part of Morgan Stanley, that are, with Bank of, Merrill Lynch, Bank of Merrill Lynch, as he said, or something like that. Then they're like, hey, listen, why can't I do this with you guys? My buddy over there at Morgan Stanley can do it. Why can't I do it? And so it puts pressure on all the other guys to do it as well. So, again, that's the big thing about this finally getting out there. That's why it's so important. That's why I talked about it. Why I want to bring them on to talk about it today, guys. It's not, oh yeah, you're just bullish, blah, 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 all this silliness that people put out there. If you guys follow me far enough, you should know better than that. But if that's what you think about me, just pay attention more. I promise you, I'm not just bullish just to be bullish. There's a lot of things going on that provide a lot of potential for this, but they have to happen, right? So that's what we're looking at. Anyway, so yes, this is what we're looking at for this. Gold, for me, it looks like we've got a 1-2 here, and then a 1, 2, 3, 4. We'll probably get a 5. So based on this, if we can get this breakout again, we're looking at levels, right? If we can get the breakout here, yeah, above this swing high right here, 24, 33, and 30 cents. If we can break out above that, then based on the height of this pullback, I'm looking for a local target of 25, 38, 90. But again, I think at that point, it's still only, yeah, see how perfect that almost gets you up there? So we go, let me zoom in. I know you guys probably can't see this if you're watching on phone. Let me see, what's the low? 1996.40. Yeah, it's right here. This is what we're looking at. So we go 1, 2, and then we go 1, 2, 3, 4, 5. Gives us 1, 2, 3 up here, right? Which goes right beyond where we're looking. And that would be then minimum initial target here. Or it could come back to the 50 at 23.3660, but looking initially around 23.83 if we get that target. And so locally, I mean, if we can break out above this 24.3330, then at minimum we should be looking likely to get up here around 26.40. So we'll break up here, we'll pull back, and then we'll break up here again, 26.40.50 to get us up there. Okay. Let me see here real quick. Bamboo, what's up, man? Could you take a look at the most ugly chart, Litecoin versus Bitcoin? Do you think it could have maybe bottomed out? Yeah. Let's see here. It's been a while since I looked at Litecoin against Bitcoin. Yeah, over a year ago. Looks like. Oh, not over a year ago. I mean, I've looked at it since. Obviously, I've got this on here, but yeah, no, that's not looking good. There's so much stuff on here. Yeah, again, we got the breakdown, so that invalidated the idea we were going up here. We didn't get above the wave X. Let's kind of get rid of this stuff and make it clearer for us here. I don't know why they did this one day. They just put on all of them and labels and everything. Okay. So what do we have here? We have a pullback to the EQ. I don't know if there's anything worth seeing here of this channel. I don't like that channel. This larger channel, though, swing high, swing low, move up. We're kind of coming down here and finding support kind of there. Let me kind of get rid of some stuff here. Let's start clean. If I'm looking at this, we'll look at Solana in just a minute here. I know somebody was asking about that. Okay, guys. So here's the thing. My first thought when I look at this here on the weekly is EQ here. And that's kind of where we're at. That's my first thought, okay? My second thought is the S1 pivot. So we need to look for what kind of increases our odds here that maybe we might be bottomed out and heading up, right? So let's do this. Instead of the channel, See what we can find as far as supports and resistances go. I like this. They got support here, got support here, and then we're finding some sideways right here. Look at the volumes dropped off significantly. That means there's not a lot of selling going on here comparatively, obviously, to what was going on up there, right? LTC is garbage fundamentally. Yeah, but it doesn't matter, right, guys? You guys have to understand, it doesn't matter what we think about whatever it is we're trading personally. And we could be right. It could be garbage, right? That doesn't matter. We're in a market. As long as there's buying and selling going on, we can make money off it. That's what's important, right? Does that make sense, guys? TM1, is that maybe Tim or Time? I don't know. You guys got to get easier names. It says, why do people still trade LTC given that it is a dead chain? I don't know. Is it really a dead chain? I thought I saw some activity on it pretty recently. Pretty good activity. I might be wrong. But why do people do it? Because they can. At the end of the day, if you're in the market and you're trading, you trade what's tradable, right? Often things that are actually good, things that we could, that gets a lot less focus. It gets a lot less energy. It's okay. Everybody's got shit coins and meme coins, right? What is it worth to trade? You could say that meme coins are more trash than Litecoin, right? You could say that meme coins, because they really serve no function. At least Litecoin says, listen, here's the function. Here's what we do. Meme coins on the pages, they say, listen, we're a meme coin. We're trash. We have no purpose other than for you to trade us. People are trading it, right? Does it make sense? Spiral Architect says LTC is in high use as a payment method for his business. Okay. Yeah. Yeah, Brian says, that's why I said fundamentally, don't hate, don't date, just trade. Yeah. Yeah. That's what we look at. It is Time Attack. Okay, I thought I was going to, your name there. I was like, is that what it says? Like I'm reading license plates here. All right, so anyway, guys, here's what I can say, okay? Well, I was going to say, I could say we are 1, 2, 3, 4, 5, but this right here is an ABC, right? So coming off here, we might have a little bit further to go. Looking at the monthly here, this could be 1, 2, 3, 4, a little bit of a bounce, and 5 coming down. Let me look over this sideways here. We're looking the range here. I mean, I'll be honest with you. It looks like accumulation here. We've got, volume generally falling off throughout the range here. We've got fault volume picking up right here, right? Right here at the lows as we broke down below EQ and came down. So I think we could probably get a bounce out of it at least. Let me see here. But we would have to see how much we can rally here. If we can break out and close above this, I'd say the EQ of the range here, but it's this white candle at 001415. If we can break out and close above that, then I would say we probably got a target up here of around this kind of area here, initial target around 001558 to 001609. If we can break out through then the swing high here, well, then we got to look, okay, do we get 5 waves up here? Because if this is 1, 2 here, 5 can get us up here at, 1687. But if this is a leading diagonal, we'll probably get rejected right around this, 0015 level, and we can get like a 1 and a 2. And then we'll break out higher. So, I mean, I think it's possible. I like the volume signature as we're kind of coming through here overall. I like that the volume spiked and it's much larger here than what we had here. And all we got was this slight little wick below the swing low. Shows us, again, a lot of demand showing up, right? right here at the swing low. But yeah, I mean, I would be looking to see, do we get rejected the pivot? If so, I'd look for a pullback probably around 1275 here. Look to go up. If we can get a close above that white candle there, that swing high, I think maybe we might get a rally into the orange range here at the top. That, basically 15.5 to 16. 15.5 to 16. If we can break out above that, well, again, depending on where we get the 1-2 at, that could give us better movement up there. Let me see, what can we get here? We do have bullish divergence here on the 3-day as well, by the way, guys. So we do have bullish divergence. Building up all the way through there, but even just right here at the most recent, do have bullish divergence. Big spike of volume at the swing low here coming up. 3-day Stochh RSI crossing bullishly. I mean, I think we get at least a rally to the top of the range. I'm probably going to move higher. I might even be looking initially at a target here from where we're at right now. Maybe even here at about almost 19 to 19.5. 0.0019 to 0.00195. If we can break out through here, that's where I'd be looking. And then things start looking kind of interesting. The weekly Stochh RSI is still pretty high here. Weekly, we've been building up RSI while price has been dropping here since since this big candle right here. So there's definitely some possibility in that. But I think you kind of take it step by step at the moment and just kind of, as it hits those higher targets, you're getting more in the count and you can start saying, okay, well, how much further do we potentially have to go here, right? Let me see here. Somebody's asking about Sol real quick. I got to get out of here, guys. I always mean to do this just for an hour, and then I get talking with you guys and sharing, all this education and stuff, and we end up behind. This is what we're looking at. So I still think the R5 pivot on the weekly, that's this 410, is still the target overall easily. I think we go beyond that overall. Right here, we're looking for an impulsive breakout above the descending, the bull flag descending channel resistance. That's our first. That's the first clue that, hey, that bottom may be in, but we really need a breakout above this swing high right here at 204.46. And if we can get that, then again, based on the height here, based on the height of this here, we'd be looking at least 303, at least 303. So I would look at 303, and then if we continue up there, look at 410, because that's just the weekly R5 pivot there. Here's what your weekly looks like, guys. By the way, pay attention. So from the swing high down here to this current swing low there, we've got hidden bullish divergence. We got lower lows in the oscillator. We got higher lows in price. So, and if we look at this, look at how this caught, guys. We wick down into resistance as support here, close back above the R1 pivot. Next one, small doji, close back above the R1 pivot. Right now, we're below the R1 pivot, but, do we close back above it by the end of this week? Remember, that's about 6 my time on Sunday, Central Standard Time. I think 6 or 7, right around there. We just had daylight savings time. So right around that time is when that weekly candle will close. But look at the volume here. Again, look, this big one right here, large lower wick, large candle, large spike of volume compared to, relative to local. Next candle, even more volume. The candle spread, the body of the candle, much, much smaller than what you have here. And so again, what that tells us is supply is putting in more effort in this smaller candle here and getting a significantly less result. And that's what you look for, is the idea of, okay, we might be seeing a bottom forming there. So now we want to see follow through with this week or the next week kind of pushing up. But yeah, I don't hate it. So yeah. But anyway, that's what I'm looking at, guys. Let me see here. Again, jumping back out here to Bitcoin before we jump out of here. Let's rally it up to the pivot. Again, initially here, we're looking for this low to hold, and we're looking for a breakout above 63, 365.71 on this chart. And, that gets us that local target here. If this low holds at around 67,500, 67,550, around up there, that'd be 3, and then 5 up there around 68,544. Okay. All right, guys, listen, I hope you guys have an amazing weekend. I was going to say week, but it's the end of the week, right? Weekend. Trade safe out there, guys. Even if you don't agree with my analysis, I hope you pay a lot of attention to what I talk about as far as trading goes, because those are the things that matter most. You don't have to agree with my analysis. People have been, arguing with my analysis since the 15.5 area on Bitcoin, the swing low there, since Ethereum hit its swing low in June of 22. People gave me a hell of a time when I said, Sol was a buy there at around $9.5. I just had to say it publicly on Wendy O Show, right? Or when I told you we were going to break down to print a spring, most likely on the link long accumulation period we had, and I said you should be looking to buy it around $5 if we can get it. So I mean, and all these PayPal, all these other ones, Square, all these bottoms that I've been talking about for the last year. So do whatever you need to do. You don't have to agree with me, but listen to what I talk about as far as trading goes, because I think that's really, really going to be significant for you. Because at the end of the day, I'm not trying to tell you where you need to buy and sell. I'm trying to explain to you, this is what I'm looking at and why. And if you're astute, if you pick up things, if you, in your life, you normally listen to people and you pick up what's not being said, you're going to learn a hell of a lot just for free out here. Okay. All right, guys. Listen, I hope you guys have an amazing weekend. You all trade safe. The only thing you control is how much you lose. Okay. So everything else aside, make sure that you put most of your effort day in and day out into getting better with your risk management. Because I'm going to tell you right now, 30 years of doing this, I have never seen not one person make money, so that they could stay in for any length of time, without actually great adherence to proper risk management. Every single person that I know and that I've met over the years, over the last 3 decades that have been trading or investing, right, have only been able to stay in for as long as they have because they use proper risk management. So if that doesn't convince you guys, I don't know what to tell you, okay? Y'all trade safe. Hopefully we'll see you at the TWC Trading Academy. But remember, hit the thumbs up, hit the like, follow me, subscribe to the channels, leave a comment, be a decent human being, not just with me, but just in life. If you've got time to be a jerk, you're wasting time. You should be using that to make money, guys. Just saying, okay? Y'all take care. I will see you next Friday. And by the way, hey, let me know what you guys think about potentially having a show instead of maybe doing on the first half of this show, its own show where we talk to people for about 30 minutes or 45 minutes, to these guests, and they can give us, share their insights and their thoughts. Again, I don't think I can do it every day, but maybe 2 or 3 times a week, maybe. And you guys let me know what you think. All right. All right. Listen, y'all take care. I'll see you next week. So long.